There are two men that can strike fear in the hearts of investors just by saying one word. Michael Burry, sell, and Jim Cramer, buy. He says it's a bull market, Jim Cramer. Obviously, the Cramer index would then tell you to sell everything because he's always completely wrong. And a lot of people do hold Michael Burry in high esteem. He says to sell. He was right about 2008. He's been right a few times since then. He was right last year, I think it was, or maybe it was 2 years ago when he said everything was overvalued. So a lot of people are worried right now. I mean, we have this nice little rally, a lot of tech stocks up 20 to 50% to almost 100% from the bottom, some of them. And crypto's up a decent amount too. I mean, like I said in my video yesterday, one of my cryptos is up 170% year to date. That's crazy. Phantom's up from 20 cents to 54 cents, and Bitcoin's up 40%. We're going to talk about what really makes sense right now. Should we sell? Should we buy? Should we hold? And then we're going to, of course, do our own research, but I don't want you to go straight to the comment section and say, oh, that's crazy, you said to buy yesterday, because I am not saying to sell. We're just talking about what Michael Burry is saying today. Now, of course, if you do want to help out the channel, there are links to Webull and Moomoo underneath the video in case you want to deposit money on the platform. For Moomoo, I think it's $100. For Webull, it's any amount, and you get some free stocks. And on Webull, you get at least $34. So deposit $10 and get $34. It's a great deal. Now, recently, Michael Burry said why he thinks you should sell. He just said sell in the recent tweet, but he said inflation peaked, but it is not the last peak of the cycle. We are likely to see CPI lower, possibly negative, in the second half of 2023 and the U.S. in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not that hard. So he obviously, that is the reason why he thinks we should sell, because he thinks the Fed will flip. Now, I will say the Fed has been very hawkish and has done pretty much exactly what they've said all the way along. Of course, a lot of people are calling for the U.S. to flip, for the Fed to flip, I should say, in the U.S. and start lowering rates pretty aggressively, start stimulating. And that's a lot of the reason why we're actually moving up right now, is because the market is pricing that in. So Michael Burry says the same thing as the markets, that he thinks that we will probably see that flip. And really, when you think about it, there would be a better time, even if you thought this was going to happen, you would think there would be a better time to sell than right now. Because if we have CPI continue to come lower, even if the U.S. goes in recession, by then we will probably be moving up in the stock market because we price ahead of time. The government will start stimulating, and then I think we'll be off to the races. Like the market will explode if we start stimulating, or even if we start cutting aggressively. A lot of people will be excited about that and start piling into stocks. So even if he thought we were going to see another inflation spike and this is going to be a long, drawn-out, multi-year problem, I would think that he wouldn't say sell now. This is probably the time where he's buying positions, knowing full well that he's influencing the market to try to get one last pump out of the market before he actually thinks it's going to fall down. Because then he could say, hey, I'm right, but I played this perfect. I bought it up until the point where inflation started to move back up. And I think that's something that we should pay attention to. If you're in the market right now, I don't like to time things. I like to dollar cost average over time. And there are a few reasons for that, which we'll talk about. But you might be able to play it that way. Just wait and see if we start to see an uptick in inflation. Maybe that's the time to get out if you really are worried about that. But take a look at these charts. We're still down 15% on the S&P 500. We're still down much more than that over here on the NASDAQ. We were down 37%. Now we're down 28.5%. Bitcoin still down 66%, and we just saw a higher high and a higher low. We typically see kind of a year of sideways action. Maybe we move up a little bit from here. In the last market, we saw us actually go up 4x from the bottom and then come back down a little bit. So we may see that again. Do you really want to miss out on a $60,000 Bitcoin or $50,000 Bitcoin? I know I don't. I don't want to try to time it and just wait for the perfect time, especially when there's so many coins pumping right now. But We still have to be careful. CPI, if it does come down and then go back up, could be a huge problem. But right now, we're just seeing consistent CPI decreases, which are pumping the market every single month, it seems like. We have seen the Fed continuously raise rates aggressively. I mean, we have not seen this quick of a turn in increasing rates in a long time. And it seems like they're still going to be somewhat aggressive. I mean, we're expecting 25 basis points today. We're expecting 25 basis points next month. And then for them to hold and then see what kind of damage they've done. But this is all pretty textbook perfect so far. I mean, they've raised rates, which has sucked. But now the market's starting to flip because the Fed sounds like they're going to flip as well. You can start to see a leveling off here. We're starting to see a lot of jobs laying off employees. PayPal's laying off 2,000 employees. Dow is cutting 2,000 employees. Every single tech company is cutting tens of thousands of employees, which is definitely going to hurt inflation because a lot of people are out of work. Now, of course, there still are some jobs. There's still unemployment that's pretty low overall. But with the way we evaluate unemployment, I'm not sure that that's really a great indication. I mean, there are a lot of people still that have multiple jobs, gig jobs, and they're counting them all as basically double employed or employed. We're starting to see huge interest spikes. The amount of money that the U.S. has to pay in interest on their debt is going up an insane amount. So it does make sense that they would have to flip. It makes sense that there's a very small landing pad for this all to happen. And we're also seeing good news from companies. They're, cutting employees. Like I said, not great for unemployment, but it's good for the companies themselves because they're able to get leaner and they're able to start being a lot more efficient. So next bull run, if they don't overhire and make the same mistake, they should be in a much better place to capitalize and have great cash flows. We have news like this. This is more specific to crypto, but Lebanon is going to devalue currency by 90% on February 1, according to the central bank chief, basically saying that they're shifting their old rate from 1,507 to 15,000, but still off of the parallel market. So basically, as I understand it, they have kept an official valuation rate for 25 years, basically saying that their own currency is valued against a dollar or a pound, a certain amount. But now they're changing it because it's been devalued so much. In the parallel market, basically like a secondary market, the pound was changing hands at around 57,000 per dollar on Tuesday. So they will pay much more on this secondary market. And we've seen things similar to that with Bitcoin and the Nigerian currency recently, because they're willing to pay 60% more than what Bitcoin costs here just to get out of their own currency. People will get out of their own currency and they'll pay a premium to do so in some of these countries. So that's great for Bitcoin. I mean, there's a lot of adoption happening right now, some from people that actually need it, and then some from people that want to invest in it. So I totally understand why Michael Burry is saying sell. He thinks we're going to have inflation tick up and this is going to be the crash of all crashes. But if it's not, or if they just land perfectly, which I think is possible. Everything looks like it's going according to plan at this point. It's been painful, but everything looks pretty good. I don't want to be on the wrong side of the market. I'd much rather be long and then have the market fall down than be short or not in the market and have it go up. Because first of all, a couple of years down the line, 5 years down the line, 10 years down the line, I don't think it will really matter. I think we'll be through this and it'll be fine. Second of all, just on Michael Burry, he's said sell so many times. He's short on so many different occasions where the market just continued to rally up. He's very wealthy already. He doesn't have to be long if he doesn't want to. He can just sit, and if he buys in a little bit higher once everything clears up, that's great. I have cash on the sidelines to be able to take advantage if we do fall lower. And right now, the market is looking good. I mean, we're breaking out in a lot of different places, whether it's the S&P 500, whether it's crypto. And I am in wealth acceleration mode. I want to buy into markets that are hurting, where you don't know exactly what's going to happen, because markets want certainty. And that's something that we haven't had. Now, some people, Stock Mo, says that he's one step ahead of Michael Burry, and he bought inverse. No sense in not making cash on the way down. And I like StockMo. I've talked to him before, but I would not be going short either. Now, I'm assuming he probably did not sell everything and then bought inverse. I'm pretty sure he's using this to hedge. So basically, if the market goes up, he doesn't gain, he doesn't lose. If the market goes down, he doesn't gain, he doesn't lose. Pretty much just evens out. But then, I would rather just be long and then have cash on the sidelines, because there are a lot of great companies I think are still at good valuations right now. I think there are a lot of companies that are improving. They're laying off workers that they didn't need. I think the Fed is doing the right thing so far. The question is, when do you buy in? Let's say everything's correct and we start to see inflation go down. They start to stimulate because the economy is too bad, or just they think that they can stimulate. When do you buy back in? When inflation starts ticking up? Before it starts ticking up? When they announce that they're going to stimulate? That would be the time that the market's starting to race up. So do you buy when it's starting to race up? No, you wait until it starts falling down, but usually the market prices in. So how are you trying to determine when the right time is to buy into the market? You don't want to miss on the next rally. I can tell you that. The last rally was a 10-year bull run? I don't want to miss on that. I can't afford to miss on that. I can afford to miss a 30% drop when in a year I'll be right back to where it is. Now, Michael Burry can work by different rules. He doesn't have to accumulate wealth. He can basically just be out of the market. He could live off his money forever. He's in the market because he likes to play the game. Now, he hasn't always been right, but he's been right a few times, and he's called some pretty big calls. He went really heavy, but if you remember in 2008, like if you've watched The Big Short at least, I assume that's pretty accurate. He was wrong for a while. He was wrong about the market. A lot of clients left him. It almost crumbled the business, but eventually he was right. And I'd rather just be long. I don't need that stress. I don't need to try to get every single play right, because if I try to go against the market, it's pretty much like trying to jump on an escalator that's going the wrong way. Like, you can battle through it if you really have to, and you can get to the other side, but it's much smoother just to go on the escalator that's going your way. And that's the market. The market generally goes up, right? The market can go down for a short period of time, so you can fight against the market for a short period of time, and you can be right. But over the long term, you definitely want to go the right direction on the escalator. You definitely want to go with the market. And I would assume that Michael Burry probably could have made a lot more money over the last 14, 15 years if he just went long, especially if you count it after the 2008 market. If he would have just bought into tech and held, he could have made a lot more money, even with the recent drawdown, than whatever he did. I don't think selling, because everything is going pretty much perfectly for a perfect landing so far, or soft landing, is a way to go. But I understand where he's coming from. This could make sense, what he said here, that we could see the Fed stimulate and cut rates, and that's what the market's pricing in. That's what they want to see happen. The only question is if we see another inflation spike that's sticky. But so far, the Fed has not sounded like that's what they're going to allow to happen. And you could say that crypto will be really affected, but we haven't really seen crypto go through such an inflationary time when we've had a bull market. Like over the last 12 months, this has been a classic bear market anyways, and inflation went up. So Bitcoin and crypto still might move up in a bull market, even if inflation's a little bit sticky. But the timing is coming in where we're starting to move up. We should have another 14 or 15 months before the next halving, and we could have another inflation spike if the Fed has to stimulate, and then start to come down a little bit already by then. And then since inflation's coming down, crypto starts moving up again. For example, if we stop moving up rates about 2 or 3 months from now, they start cutting rates 2 or 3 months after that. That's August. We start to see an inflation spike in October or November or December, and then they start having to rate hike very aggressively again going into early next year. And then we start to see inflation come down around April of next year. That would be coinciding with the Bitcoin halving. That could all fit before the next Bitcoin halving, and we could see another bull run right around the time that we typically see. And that's if we do see that inflation spike. Otherwise, we could just start to see the Fed starting to cut rates. And this is what I think will be more likely to happen. They taper off rates for several months throughout this year. So like maybe April through July or August, then start to slowly wind down rates. Maybe it's a quarter point, maybe it's a half a point at a time. And I don't think we'll see a huge inflation spike. But then we would go into the next Bitcoin halving and we could see the market explode because we're still cutting rates and companies are starting to bring in really good earnings. It's time for crypto to heal and to move up after the Bitcoin halving. But let me know your thoughts on all this underneath the video. Are you selling? Are you more worried about Michael Burry saying to sell or Jim Cramer saying to buy? Again, thank you so much for checking out the links underneath the video. Thanks for watching. Hit subscribe if you want to see future videos, and I'll see you in the next one. Bye.